Remember the supply chain mess of 2020 or the sudden market drop of 2022? Those were black swans, rare, unpredictable events that hit fast and hard. The truth? They're not really rare, they're inevitable. And is your portfolio ready? If not, they can be devastating. But yeah, we were kicking around some ideas for show topics. And kind of this idea of a black swan event came up, so kind of like we said in the open there, they are bound to happen. We know they're going to happen. We just don't know usually kind of when or where, but that doesn't mean that we can't be prepared for them based on not only how our portfolio is constructed, but I think also how we react. I think those two things can really help you through some tough times in the market.
Yeah, definitely, D. It's almost when the analogy that comes to me, and I'm a big analogy guy, and they're usually sports related.
Yep.
Do you remember Mike Tyson?
I do.
Yeah, the boxer Mike Tyson. So one of his quotes is, everyone has a plan until they get punched in the mouth,
yep.
Right? So I feel the way that this connects to this, the topic today is like, everyone sets sail with this portfolio, and then a monkey wrench gets thrown in, and then it's like, well, what do we do now?
Right.
Well, I think the antidote is like, expect to get punched in the mouth,
Exactly.
right? When you go in there, part of your plan should be, what happens after I get punched in the mouth? You get punched in the mouth, your portfolio gets punched in the mouth, you're dazed, you're confused, you're shocked, the world seems upside down. Have that pre-plan kind of in place to know where you go next.
Yep, for sure. And the reason why I thought this topic was timely is because we are sitting at basically all-time market highs across the board. We're seeing especially like the tech and the AI sectors, NVIDIA specifically kind of propping up the market again, like we've seen over the last couple of years. So when those things come into fruition, you don't need to be kind of running away scared all the time, but you just have to be cognizant of the fact that, hey, we are really doing pretty well. We're at all-time market highs. The economy is not perfect. There's lots of businesses out there that are not being run perfectly on the S&P 500, and we just have to be careful. We have to make sure that not only through asset allocation, but that we kind of understand the landscape of what's going on out there. We kind of understand that the market's just not going to go straight up, 10, 12, 14% every year. That is not how it works. So we have to make sure we understand that, and that not only our investment portfolio has taken that into consideration, but also our financial plan.
Absolutely, and really, you're hitting on some important stuff. Like, there's the behavioral finance piece to it, so that expecting it's going to happen, not panicking, making sure you keep a level head when the inevitable turmoil hits. How to approach that. But from a practical point of view, what I would say is, it all comes down to like, how does this impact my life at that moment? So
right.
Let's think about hey, we get this curveball, right? How am I, if I'm in retirement, how am I going to make my ends meet, or I cover my shortfall for that period of time while the market is not cooperating, my assets are not in favor? What kind of emergency fund or what kind of safe haven assets do I have to fall back on to get me through those lean times?
Yep, for sure. A lot of my clients that I work with, we built out, an income strategy of some sort. Some of those income strategies involve boring investments, right? Whether they're annuities or, dividend-paying stocks, right? They're not the investments that you're going to wake up in the morning and say, oh my gosh, this went up this investment just went up 20%, right? I know you have experienced this too, Dave, when, someone brings in a statement on their annuity and it only went up, 4% over that past year. It's like, hey, what's going on here? A lot of those have future income payouts that are the main mechanism for that investment. And while boring and not going to be a home run every time, they really are kind of the basis of people's retirements, and having, a guaranteed income stream is a really important thing, because we know that these events are going to happen, and we need some protection when they do.
And it's funny you bring that up, because, depending on which part of the market cycle we're in, they're either your least favorite part of the portfolio or your favorite, because in those periods where the turmoil hits, the market is pulling back. Even in the beginning of this year in April, right, when the market kind of corrected 15-20%, now like the light bulb kind of went on a little bit, and like, oh, I'm glad I have kind of this bedrock built into my strategy that isn't reliant completely, on the market, and it's more of an income-based strategy, and it's going to help me kind of sleep better at night.
Yep. And that was the example I was going to bring up. 2022, or I'm sorry, not 2022. What just happened in April? With the tariffs, right? And I can. There's lots of interesting Trump moments over the years, but Trump with the tariff poster board was definitely up there. We're all watching here as the market's tumbling away, and Trump's just having a great time up there, slapping tariffs on everybody. And obviously, everyone was freaked out about it, right? No one wants to see their portfolio go down. No one wants to see it go down in big chunks in a short amount of time. But we had a plan, and that's what a large part of our jobs are, is kind of reiterating that plan to our clients. And that was a black swan event, even though we were expecting tariffs, right? No one was expecting that kind of market pullback. And, the long story short of that strategy was, we were a little bit on the sidelines heading into that event. And over time, there were some buying opportunities.
Absolutely. And going back to like the whole idea of like pre-planning, our clients, they're going through a planning process, and one of the things that we do as part of that process is we plan for what we call, shocks or bear markets, or what happens if, you lose 20% of your assets overnight. How does your financial plan respond to that? So I think going through that process, understanding where the weaknesses are in the plan, can help you shore up those potential pitfalls in advance.
Yeah, absolutely. When I'm sitting down with my clients or potential new clients who aren't working with anyone yet, that always seems to be what is kind of at the top of their mind. Hey, can I make it is kind of the first question, and then can I make it even if times aren't perfect?
Yep.
Right. And that's really what that planning process does, is it helps ease the mind of people to be able to show them with a complicated software program that, hey, if these things do happen and the market does drop by 20% and it doesn't correct immediately like we've been seeing in the past, what does that do to your portfolio? What does that do to your retirement? Can you still live the lifestyle that you want to if that happens? And if you can't, I would recommend that you don't go forward with that plan to retire, because those things are going to happen. This is exactly what we're talking about.
That's right. Like, that is the name of the game with the planning, is understanding. The whole point of like Monte Carlo testing and this probability testing is you want to give yourself the most coverage under the most scenarios, because it's that's literally the theme. This black swan stuff, it's the randomness that's going to unfold going in the future that we can't even define it right now. But we know it's going to impact the markets to some degree. How can we withstand that trouble spot, right? That's what we're looking to protect against. And an interesting an interesting study just came across my desk. I read it the other day, and it's back to that human psychology part. It's like the study indicated, in 2025, the survey results compared to 2 years ago, there was a dramatic upswing in investors, like individual investors, who felt better about their retirement readiness and how their portfolio was performing. And it just so happens to coincide with 2 full year periods where the market did well. So back to that human psychology piece, it's like, for whatever reason, we're kind of like wired to expect the current conditions to extrapolate forever.
Right.
And that's the exact opposite of how markets actually work.
Yeah, for sure. And I've talked about this all the time. Everything is priced in right now. There is with the way information travels these days, there's really nothing that isn't instantly priced into the market or a specific company, a specific stock. So the opportunities to kind of sneak one past the market are becoming fewer and further between. So understanding the market cycles, understanding that things are not going to be perfect forever is really an important aspect to the mentality of going into retirement or being in retirement. It's a really important thing to mentally tough. I don't know if that's the right way to describe it, but mentally prepared maybe is a better way to say it, that these things are going to happen. They're going to happen in the future. We know these things. Are you set up to handle it? That's really the most important part.
That's very well said, D. And just, to reiterate, build off that a little bit, that's why you're going through this process in advance. We're testing these trouble spots in advance. We're making sure you're set up. We're constructing a portfolio that's going to get you through the lean times. It might not be the sexiest investment strategy at all times, because we're not going to load up on all these growth stocks like at any particular moment, because we know what happens in the future and how these cycles play out.
Yep, for sure. And I was going through our notes here. I don't think we really need to get into specific investments because I don't think that is the right advice to give out, because there is no one-size-fits-all solution. A lot of it depends on the current market conditions. We have long duration tips written down here as a strategic asset class. I don't think that is too strategic, quite honestly. It may work out well. That's inflation protected bonds, essentially. If you don't know what tips are, that might have worked well in 2020, probably to 2024. Probably not the best thing right now. What I will say again, I think as we kind of close this down, especially for retirees, you have to have that income strategy. That is the number one way to combat black swan events that you don't see coming, is understanding what you need and understanding where it's coming from, and the more guaranteed fashion that you can do to get that income, the better off your overall plan is going to be.
Yeah, and having that in place is going to give you confidence. It's going to help you sleep better at night. For when this inevitable stuff happens, you're going to feel well prepared.
Yeah, for sure. And I don't want this to come off as just like a giant advertisement, even though it kind of is. But having done this for a while now, and having seen people go through the planning process, there is no better way to feel secure in your retirement than putting together a real financial plan. It's going to be a cash flow based system that tells you where your income's coming from over the years. Like Dave mentioned already, stress tests with Monte Carlo scores. It is infinitely more important than just picking investment A versus investment B. So, if you don't have one and you're interested in learning more about it, hit us up at info@swpconnect.com. We're happy to take a look at your situation. If you're a client out there and you know someone that might be looking for advice like this, put them onto the podcast, because it is so important, and it is so personalized that it's really a solution to a lot of the problems out there.
Well said.
Hey, thanks, Dave. I appreciate it. So, and Dave, thanks for sitting in for Tony this week. We always appreciate you on here. And out there to you guys, thanks for listening. Again, if you have any questions, comments, concerns about these Black Swan events, hit us up at info@swpconnect.com, and we'll talk to you next week.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.